Thank you very much, Mr. Chairman. It's nice to see you again, Mr. Greenspan.
Thank you.
Mr. Greenspan, as the nation's chief economist, I would like to tap your expertise. Over the years, I think, as you know, you and I have disagreed on some major economic issues. As I recall, the last time you were here, you informed us, to my amazement, that you actually believe in the abolition of the minimum wage at a time when many of us think we should substantially raise the minimum wage. But I also have a very difficult time in recognizing the kind of rosy economy that you are portraying. And that is not the economy that I see in Vermont, and not the economy I think that exists in many areas of this country. The reality is, as you know, that tens of millions of Americans today are working longer hours for lower wages. 25 or 30 years ago, when you and I were a little bit younger, the norm was that in the middle class, one breadwinner, one person could earn enough money to take care of the family. And today, for the middle class, that is very much the exception to the rule. The statistics are rather amazing about how many two-worker families there are because of the decline in real wages. With a $400 billion trade deficit, some folks, my colleagues, talked about steel, but it's not just steel. We have lost millions of decent-paying manufacturing jobs to China, Mexico, and elsewhere, and they're often being replaced by part-time, temporary jobs in the service economy, which have no benefits, which are low wage. We have 44 million Americans who have no health insurance. Millions of senior citizens can't afford their prescription drugs. One end of the country to another, there's a housing crisis. Middle-class families are paying 50, 60% of their incomes from housing. Families are going in debt to pay for college. The child care situation is a national disgrace. So I don't quite see the economy that you are talking about for the working families of this country. But in fact, the issue that I wanted you to comment on had to deal with a front-page story that appeared in the Wall Street Journal on Monday. And that dealt with the growth of economic oligarchies in this country and the reality that a small handful of corporate executives have enormous power today over the U.S. economy, and perhaps never before in our history have so few people had so much power over the American economy as is the case today. The Wall Street Journal gave some examples, and let me give some others. 20 years ago, there were thousands of small cable TV companies. Today, a pending deal would leave 3 companies in control of 2/3 of the market. We used to have many defense contractors selling defense products to the government. Today, there are 5. We used to have many, or at least 8 Baby Bell telephone companies. Today, there are 4. In terms of the media, fewer and fewer giant media corporations control television, radio, newspapers, and magazine. Oil. In the wake of oil company mergers, 5 companies control more than 2/5 of domestic production. Agribusiness, 5 firms now account for over 80% of the beef packing market. 6 firms account for 75% of pork packing. Airline competition is almost non-existent in many parts of this country. So my question to you is, has the government been too lax in terms of enforcing antitrust regulations? Have we allowed fewer and fewer corporate executives to have huge amounts of economic power by controlling industry after industry? Is it morally right that CEOs of large corporations now make over 500 times what their workers make and seem to make more money to the degree that they lay off American workers? Does any of this, do you have any concern about any of these issues?
Well, Congressman, let me just say there are a few qualifications I would make to the data that you cite. First, to be sure, there has been a very considerable consolidation of defense procurement activities because the defense budget as a percent of the GDP is very much smaller than it was in periods past. So when you have a declining industry, you would expect that to happen.
Several $100 billion is not insignificant anywhere.
Several $100 billion is a good deal less than remember we're talking about the relationship within the economy. So that if you go back 20, 30 years, the proportion of the economy which represented defense was much larger, and you can afford, or put it this way, that there was enough business for a much larger number of companies to function.
But it's not just defense, Mr. Greenspan.
No, I understand that. Let me go down to, to be sure, there's been a consolidation in the oil industry, but remember that a very significant change has occurred in the last generation or so, when most of the oil, a very significant part of the oil-producing properties have effectively been taken over by host countries, especially in the Middle East, so that the nature of the international oil companies have changed. Now, I'm not going to say what is in the media. The media is a very significantly controlled operation. That really gets down to what government policy should or should not be. But we have an extraordinarily competitive economy today. It's more competitive than I ever recall it, and indeed the international aspects of the competition is one of the reasons why I think, contrary to the remarks that you made, that the standard of living of this country is higher than it's ever been on average. And two,
I would respectfully disagree with you on that, and I think the facts do not speak to what you said.
Gentleman's time has expired. Does the chairman wish to continue it?
I just basically wish to stipulate that we have an extraordinary standard of living. I don't deny that there are, as there always will be, significant parts of our population which are basically in difficulty in one form or another with respect to the economy. I think that we ought to work as hard as we can to alleviate that, but I don't think it changes the fact that the economy is doing extraordinarily well in a historic context, that all of the data that most economists would adhere to believe the standard of living is higher than ever before, on average. And if you wish to dispute that, then to be sure we do have, a very significant disagreement, as we always do.
Gentleman's time has expired. The pivoting from one corner of the philosophical divide to another, I now recognize the gentleman from Texas, Mr. Paul.
Thank you, Mr. Chairman. I think, welcome, Chairman Greenspan. I wanted to start by referring to a speech you gave in January at the American Numismatic Society, where you spoke profoundly about monetary policy, where you expressed that central bankers have had this relative success over the past decades, and it raises hopes that the fiat monetary system can be managed in a responsible way. So I think you're still at that point of hoping that this system will work. I maintain that the jury is still out on whether or not fiat money will work on the long term. And then you followed that up by saying, in case it didn't work, and I don't know whether you had tongue-in-cheek or not about this, but you said that we might have to go back to seashells and oxen as our medium of exchange. And then you reassured everybody that the open discount window would have an adequate supply of oxen. Mr. Chairman Oxley, if we get to this point, which I suspect we will someday, I ask you that we have hearings to debate the issue of what medium of exchange that we have before the Fed starts using oxen as a medium of exchange.
Are you referring to the chairman here?
Yeah, I hope that you will at least consider that. But I think it is an important point, and I want to relate that to the Enron issue, because in many ways, I think the system that you have been asked to manage, it's similar to being asked to manage an Enron system, because Congress is notoriously in favor of deficit spending. We are currently expanding the national debt at $250 billion a year, and we have nearly a $6 trillion debt. Now, we create that debt by buying votes. We spend a lot of money. Now, the Federal Reserve comes in, and they buy that debt in order to maintain the interest rate that they think is the right interest rate. And they take that and use it as an asset. You put it in the bank, you call this debt that we created as an asset, and you use it as collateral for our Federal Reserve notes. So that's a pretty good scheme, and I think in the moral terms as well as the economic terms, it's very similar to what how Enron operates. I'm not convinced this system works very well, because a lot of people here praise you for the adequate amount of liquidity, and that's what That's what inflation is. Create more money, lower interest rates. Every time you ask for liquidity, every time you ask for lower interest rates, you're asking for inflation of the money supply. And I think what we fail to do is ever ask about the cost. Do we ever concern ourselves about the people who have had 2/3 of their income removed because they happen to be savers and living off interest? We gouge them with inflation, the loss of purchasing power, as well as taxing that. And yet a lot of people in this country have suffered from that particular system. Now, the analogy I would like to draw is something you said in your testimony on page 13. And you have mentioned several times now that Enron may be a good lesson. And I think it is. And I'm not for more of this regulation by SEC. I think you're correct that derivatives provide a market tool that is worthwhile. But you said the Enron decline is an effective illustration of the vulnerability of a firm whose market value largely rests on capitalized reputation with very little, if no, physical assets. That's exactly what our monetary system is all about. And that's why I believe the dollar is vulnerable. We in Congress do not have a responsibility to run Enron. Some other government has a responsibility to deal with fraud. We have a responsibility to the dollar. And I think that's what we fail so often to address around here. And you said that Enron provides encouragement that the force of market discipline can be counted on over time to foster a much greater transparency. That's exactly what the market does with money. If you look at what the rapid and the sudden devaluations of the fiat currencies around the world, if you look at what happened to us in 79 and 80, that was the market coming in and forcing vulnerability and transparency on us. Now, gold gives you a hint as to what's happening. Gold has sent a mild message in this past year, in spite of the fact that central banks and others continually sell and loan out gold and push in that price of gold down. But there is a message there. So I would ask you, can you see any corollary whatsoever on what you're asked to do in running our monetary system to that which Enron was involved in?
I hope there are fundamental differences. I mean, there are. It's first dealing with essentially a fiat currency. What it is that we are doing is that the currency is granted value by fiat of the sovereign, as it is said in the textbooks. The issue there is that in years past, there's been considerable evidence that fiat currencies have been mismanaged in general, and that inflation has been too often the result. What I was mentioning in the speech that you were referring to is the fact that there is some evidence that we're learning that lesson, learning how to manage a fiat currency. I've always had some considerable skepticism about whether that in the long run can succeed, but I must say to you the evidence of recent decades is that it has been succeeding. Whether that continues is a forecast which I can't really project on. The Enron situation is essentially one in which there was an endeavor to imply that earnings were much greater than they really were, that increasing debt was hidden. I can think of no reason to have done what they did with their off-balance sheet transactions other than to obscure the extent of the debt they had. And what essentially was squandered in that process was the reputational capital which they had succeeded in achieving over a period of time. And I don't perceive that anything that we are doing as a central bank involves anything related to that. I hope that where we need to be transparent and indicate what we are doing, we do so, and we do so except in those areas where it, as I mentioned to you previously, inhibits the ability to actually function as a central bank. But as I say in summary, I hope your analogy is inappropriate.
I guess we'll all keep hoping.
The gentleman from California, Mr. Chairman.